Welcome to the Honest Money Show. A big thanks to our sponsor, Shop Bitcoin Australia, for making today's episode possible. Hello, joining me today is James Check, also known as Checkmatey. James Check has a website called checkonchain.com, and he does on-chain analysis. You guys probably already know of him. He's world famous. And over to you, James. Welcome to Honest Money.
Thanks for having me on. No, it's good. It's good to be here. And yeah, I mean, I consider myself a Bitcoin analyst. The on-chain side is definitely where I've specialized over the years, but in many ways, like Bitcoin has so much transparency in terms of its data. We can see spot markets, we can see derivatives markets, we can see on-chain markets, we can see the ETFs now, we can see treasury companies, and all of these different elements just construct the interesting world that is the Bitcoin economy. And I consider myself an observer and an analyst of all the people. And I think that's the most important thing. It's the humans behaving in futures markets or buying and selling in spot markets, hodling their coins, not hodling their coins, taking profits, taking losses. At the end of the day, Bitcoin is a story of people. It's a very strange asset because people love it and hate it. And it really is on one of those two bell curve extremes. Very few people are kind of neutral on it. And as a result, we get a really interesting dynamic of people making good decisions, bad decisions, expressing how much they hate it, expressing how much they won, hodling because they believe in it, and selling because they've just had enough of the bear market. So to me, it's fascinating. It's a study of people as much as it is the asset.
Absolutely. And I love what's happening in Bitcoin at the moment. I think this opens up a great, gate for this conversation. So we know there's been a drawback because a lot of the people in my life who refuse to talk about Bitcoin with me have come to me. It's like, did you know Bitcoin has had a drawback? I'm like, yes. It's almost like there's a sense of smugness.
Did you also know that it's up 110% 2 back-to-back years in a row? Did you know that as well? Yes, funny that.
I know, but it's so bizarre because it's this new asset class and it's so different to anything else, people just lose their manners. It's like, imagine if Australian real estate dipped by 10% or 20% in a month. I would be a dickhead if I went to
How are you going not paying your mortgage?
Like, right? Rude.
Can you imagine that? Like, can you imagine it?
No, it would just be considered the rudest thing, but somehow it's perfectly okay to do that with Bitcoin.
Totally. How do you feel now that your superannuation's been cut in half? How does it feel? You can't retire now? Does that feel good? I told you should have sold it. It's like, get out of here. But you're right. It is a strange asset where people feel this like they're allowed to make noise about it in a way that they just wouldn't with any other asset. So it's a strange thing. But again, it's also why the journey of the Bitcoiner is interesting, because you have to build, maintain, and hold conviction when literally the whole world, from the government down to your auntie, is telling you that you're an idiot and you're wrong. So that takes a very special, it's a character building exercise for sure. But I've got this thought process I've had recently. For folks who've been, let's just say from the previous cycle onwards, 2020 onwards, if you went through that period of time, like if we look at the regulatory environment for Bitcoin right now, it's basically embraced by the US administration. We've got ETFs. They're the most successful ETFs of all time. Wall Street's on board. The banks are coming on board. We're not early anymore, but it's now acceptable to own it. Asset managers are allowed to recommend it. We're slowly getting to that point in time. I don't think we go back to the world where it's as hated and actively being attacked by the regulatory regime. For the Bitcoiners who survived previous cycles, you lived a once-in-a-lifetime experience. We will never have a time where the whole world tells you that you're wrong. Only people who are wrong are going to tell you that you're wrong now. So we're now in this environment where if you lived that and you survived it, the conviction that you built of riding an asset down 80% when the whole world tells you that you're wrong, that's a once-in-a-lifetime journey. So you got to take that conviction as a tool in your belt, because it has shaped you in a way that no one will ever experience that again. I can't imagine an asset like Bitcoin going through multiple 80% corrections and ripping back to all-time highs time after time after time at any point in our lifetime. I can't imagine an asset coming out that's going to beat the Bitcoin ETFs. Like, what on earth could it possibly be? So you've kind of lived a very unique period in Bitcoin time, and you should take those tools and really, look after them and put them to good use, because you've got a skill set that most people do not have.
Yeah, I love that. And it's funny because, I'm only new to Bitcoin. I entered Bitcoin just before the halving last year. So I've been in for just over a year, and there are still people that are, vocal about it, even on LinkedIn. And these people now, there's a handful of them, and we all know kind of who they are. It's kind of a bit of a brand building exercise. Like you almost expect them to come out with a comment, especially where there's a drawback, calling it a scam. And it's just really funny because these people are, it's kind of, I have secondhand embarrassment for them. Like,
Totally.
it is a bit, it's not the same as criticizing it back in, 2014 or 15 or whatever. Like, it's a bit different in 2025 to have that opinion and have it so strongly. Um, yeah, a few people flipping, but have you?
And something that I often do when you've got those particular like TradFi analysts where they like to say like, oh, Bitcoin's going to go to zero, it's going to go to zero. Like, we're not talking about Peter Schiff, because Peter Schiff, I think he's just a meme at this point in time.
Yeah, yeah.
But there's genuinely still TradFi analysts who think it's going to zero. And my line these days is like, okay, based on what? Like, what is your thesis? Give me your threshold. And this is the most important thing, because if you're an analyst and you want people to take you seriously, you need to know what your threshold for being wrong is. So if you just keep saying it's a scam, and next thing you know, it's at a 5 trillion, then a 10 trillion, then a 30 trillion, then it flips gold, then it actually becomes money. If you actually look at those like milestones, one of those on that journey, you have to admit that you were wrong. And if the analyst cannot give you a very clear threshold, and then we've got a target, we say, okay, 2 trillion wasn't enough, but 5 trillion is. I'll see you at 5 trillion. And then you just come back with the receipts and you say, well, are you wrong? Have you accepted defeat? What do you think you missed? And what you actually find is that most of these analysts, they do not have a threshold because they haven't thought about it properly, and they aren't serious analysts. And that's all you need to know. So just ask people, what is your threshold at which you would perhaps reassess your priors? If they can't come up with it, that shows you how much thought they've actually gone into.
Yeah, I do keep screenshots. Talking about keeping receipts, I have been taking screenshots, especially on LinkedIn. It's quite funny. Like I remember speaking to Ethan at the time. I was like, why am I being attacked so much? I'm just posting about Bitcoin, and I wasn't even being aggravating or anything like that. And yeah, a few people, like lots of CEOs, lots of people with ASX listed companies, like people in traditional finance, quants that own companies that like really coming at me. And I've kept screenshots, and there's some really funny exchanges that maybe I'll do like a yearly video of hate mail that I've been receiving.
A montage. Yeah.
Yeah, it's like since they've commented publicly, I'm sure they will feel very comfortable with me um, making fun of them online.
Totally.
Um, but I would love to know, James, is what's happening at the moment? Where do you see the market? Like I've seen a few different hypotheses as to what's happening, potentially three. One, that it's just a minor drawback and we're about to resume the bull market. The second scenario is that we're going to continue to chop consolidate for another extended period of time. And the third one, which is the bear case, is that we might have actually seen a top and now we are going back.
Sure. Yeah, and look, the truth is, the first things first, no one can predict the future. And I think that's a really freeing exercise in markets. People love to pretend that they've got their famous indicator and it's going to tell them the future, and it just doesn't work that way. So everything you think about has to be in probabilities. Now, the way that I think about things, this cycle has been different. It just measurably has been different. The volatility is different. The drawdowns are nowhere near as severe as they've been in the past. We take a lot longer. So if you go back to 2017, for example, you go on holidays, like to the beach for a weekend, you come back, the price has gone down 40% and it's back at all-time highs. You missed it completely because you were too busy swimming. Now, you can be swimming the whole year and you'll be at the exact same price. And that is a whole different kind of pain, because the market going down It's funny. I think there's, for Bitcoiners in particular, because we love this asset so much, we want to buy more of it. A 5, 10, 15% dip is just hell, because it's not enough of a discount that you're like, oh yeah, I'm going to step in front of this thing. But it also, like, if it's just down 15%, it's not enough to step in, but it also feels a bit expensive. It's not the top, but it's also not the bottom. You're like, what is this thing? I don't know what to do. When it goes down 30%, everyone's like, oh yeah, here we go. Like selling shares, looking under the couch for coins. Like, I'm just going to go and buy as much as I can. So you need like enough of a downside move for Bitcoiners to really go, okay, now I'm going to step back in front of this thing. Now, in the current market structure, I mean, it's a very complex, I would say it's the most complex market structure we've ever seen. Much easier to understand because it was purely just like organic adoption back in 2017. There's a bunch of stuff with leverage and derivatives going on in 2018 and 2019, 2020. This cycle is very different. We've got the ETFs, which change things. We've got treasury companies, which are a minor factor, but they do change things. Institutions, they behave very differently to individuals. Individuals smash buy, panic sell. Institutions, they sit there in the order books and they allow the market to sell to them. They don't chase the market. They don't FOMO buy. They allow people who are scared to sell to them. So they're patient, they're sophisticated, they're hedged, and they just sit there and wait. And they have all the time in the world, and they've got all the money in the world. So they behave differently. We've got options going live in for the ETFs. That's a huge thing. It's nuanced and detailed, but that changes market structure as well. And right now, in terms of that dip in the pullback, my current odds is about 70% bull, 30% bear. And I do think that people should take the bear case seriously. And it's simply because it's the most bearish like setup that we've seen in Bitcoin of this cycle. Now, then I also come back and say, well, if we go into a bear market, I don't think we go down 75%. I just don't. I don't think we have the explosive uplift. And the reason why you need a really strong, like unsustainable move to the upside to create the downside of 75 is hyperbolic prices make people do dumb shit. That's just like people get so over levered and they buy way too much with money that they shouldn't have spent. And they buy it all when it's the most exciting, which is the perfectly wrong time. When the market's been like grinding like this, people have so much longer to like, oh, okay, I'm going to de-risk there. All right, I'll go and hedge over there. Maybe I'll go and buy this other thing. There's no momentum here, so I won't no one's over leveraging in a market that's going nowhere. There's no excitement. The pullback, if we think about this from US dollar terms, we're about 100K right now. I think if we sell off, we probably go down to like 80K, 85, something like that. That's kind of where I think we bottom out. I'd be amazed if we go below 75. And if we do, all of those prices I still think are just unbelievable value, anything under 100K. So then you go, well, if your downside is 20% from here, like I'm a Bitcoiner, I've been through 80% drawdowns like 5-6 times in my time. Like I don't care about 20% pullback. I'll buy that as well. So then I'm like, but the upside is just infinite. So I have a feeling that we're getting right now, I think most of the sell side pressure is coming from existing holders. I mean, we can measure this. I've been calling it more recently the Great Rotation. There's a lot of people who believe in the Bitcoin 4-year cycle, and they are selling right now because they believe the top is in. There's a lot of people who are disappointed with the market cycle because it hasn't gone up enough, which is code word for their expectations were completely unrealistic and it didn't get met, and now they're sad. I think a lot of people got absolutely destroyed speculating on shitcoins, which didn't go anywhere, and treasury companies, which went down 90%. So I think a lot of people lost a lot of money on not Bitcoin things, and they blame the market cycle for it. And there's also $100,000. Like if we think about how far Bitcoin has come in 16, 17 years, if you tried to cash out, we saw one guy cash out 80,000 Bitcoin back in July. 80,000. He bought them in 2011. He held them for 14 years. He cashed out $9.6 billion with a B. What do you do with that kind of money? But like, imagine if he had sold $9.6 billion worth of Bitcoin a year ago when the previous US administration was in. He would have had his bank account shut down. Like the dude would have gone to prison. The feds would have been at his house in 10 minutes. Now he actually has the ability, because it's no longer, being attacked actively by the US government. He now actually can safely sell for the first time in his entire life that he's held Bitcoin. He can finally actually exit. So 100K has been a psychological stretch target for so many people for so long. It's just a period of time where the old money who bought Bitcoin when it was going to die and it had no chance of success, it has succeeded. They're wealthier beyond their wildest dreams, and they finally have the opportunity and the buy side to actually exit their position. So honestly, my view is that the market is just going through this rotation. We're getting a changing of the guard, old money to new money, retail primarily to institutions. High net worth individuals are buying this thing. Institutions are buying it. I guarantee you there's going to be some news in the next 12, 24 months of some big sovereign nation that's been buying in here. Because here's the thing. The sell side pressure we are watching right now is in the hundreds of billions of dollars, just in this year, hundreds of billions of dollars. The amount of sell side that Bitcoin has absorbed, by my estimates, is as big as the market cap of a top 100 company in the world, the whole market cap. So who the hell is buying? Because that's the real interesting story. For me as an analyst, I can see when people who bought 5 years ago sell.
Yeah.
What I can't tell is who they sold to. We can only find that out later on. But if you're coming into this market with, like, in aggregate, there's not one dude here, but like lots of entities, collectively bringing hundreds of billions of dollars and being willing to buy this thing above 100K, these are not small fish. These are giant allocators who just take supply off the market. They're not looking for a 10% pump. These guys buy this stuff and they put it in a vault and they never talk about it again. So there is going to come a point where there's just no sellers left. And to me, that's a really exciting concept. So even if we go lower, it's just an opportunity of the ages. Anything below 100K is a gift in my view.
I would love it. I would just really,
Yeah, I
really
know. It's a psychopathic thing that we have as Bitcoiners. We're like, I want the price to go down. People are like, it's a drawdown. I'm like, I know, it's great. I love it. I can actually buy more. Like, what are you, insane? I'm like, probably, but like, it's working. You know what I mean? It's working.
Yeah, and that was my reaction because when a person in my life that said to me like, "Oh, did you see it dipped?" in a kind of smug way, and I didn't even register how they meant it at the time, but I was like, "Hey, it's on
Yep.
sale,"
Yep.
and yeah, they
Totally.
must be they must be wondering like, "What is wrong with this chick?" But
Well, there's a
yeah,
psychological thing because markets are a very unique beast because CEOs in particular, like people who are very competent at business, actually suck at markets because they think that they can solve it the same way. Markets are actually a very interesting dynamic because humans are naturally geared to be bearish in markets because we're always afraid of getting, like, if you go back to like an instinctual level, no one wants to get eaten by the lion. So we're always looking for like the negative things in our environment to like protect ourselves. It's why doom scrolling is a thing because people like, we gravitate towards negative energy because we're geared for looking for it. So being an optimist is actually not the norm for people in markets. We fear loss, and we also, it's actually scientifically and psychologically shown, the fear of a loss. So when you buy an asset and it goes down, that hurts. But what hurts a whole lot more is when people wanted to buy and it goes up and the train leaves without them. That FOMO fear is actually way worse for most people. And what happens is they wait because they want to feel safe. The price is going up and it's going up, and then they finally feel safe when everyone else is buying. And when everyone else is buying, that's usually the worst time to be buying. So there's a good framework here. Whenever if you go to buy Bitcoin or any asset and your stomach is churning, like you just feel sick to your stomach, you're like, I'm making a horrible decision here. Press on, do it, carry on, do not stop. When you go to buy and you're like, I can't wait, like I cannot wait for my money to hit my bank account, I need to send it to the exchange right now. Stop, go for a walk, It's the exact wrong time to buy. Never ever buy something. If you're a daily DCA holder, who cares? But never buy something when it feels great because you're probably buying, maybe not the top, but you're certainly buying at a relatively high price.
Mm. I've seen recently that River in the US has released a product like a buying feature where you can double down on those drawbacks. So if you've got a limit order and you've set it, I don't know, at something, if I don't exactly know how it works, but I understand the concept that you can basically add more to that order so that you can buy more if you've got
Right.
cash sitting in that
Sure.
account. And I thought that was quite like a clever feature. Um, which got me thinking then, it's like, I wonder if it would be a cool idea to somehow develop a product that actually buys on the fear greed index. So the more fearful the market is, the more you buy.
Totally.
Would that work?
And in many ways, this is how I try to structure them in for me when I do my analysis. I use my own analysis to try and work out where I want to buy. And I've got a couple of tools that I use. So the fear and greed index is kind of, it's okay, but there's other tools that actually show you when people who bought the local top, it's amazing. Like human psychology is so consistent. A bunch of people always buy the local top, and then they hodl and they hodl, and the dip keeps dipping and they keep dipping, and then eventually they go, oh my God, I'm done. I bought the top, I'm an idiot, and they all sell at the exact same time. So when you see coins that were bought high being sold low and locking in the losses, that's when I step in. That's when I'm like, thank you very much. Now I know that I'm not buying the top. It may not be the bottom, but I know I'm not buying the top anymore. So it's a very similar dynamic. Show me when the dumb money who FOMO'd in at the top, hodled all the way down, show me when they capitulate, because that is more likely to be some kind of meaningful low than not.
Are we seeing like dumb money this cycle as much as previous cycles, or do you feel like overall like buyers of Bitcoin are starting to be more savvy, or is it still kind of the same tourists coming in and out, even though it's kind of chop solidating? Like, what are you seeing?
Yeah, it's a very good question. And the answer is there's always going to be dumb money. So a lot of the signals I was just describing will still occur. However, I would say that the average Bitcoin holder is significantly more serious these days. And there's a few elements to this. In just about every market, for all history, you'll often hear people say like retail is the dumb money. And historically speaking, they are. Retail generally are the dumb money. Bitcoin is actually a little bit different because retail, and you can see this as a great chart that I've got, that it shows like the 90-day change or the 30-day change of small balances. We call them shrimp. So this is looking at all the wallets that are under 1 Bitcoin. Now, in 2017, that was just through the roof, the biggest buying that we've ever seen from retail, buying the absolute Pico top. That's when I first bought. I bought the absolute top of that market. So we saw a huge swell of people going, oh my God, get me into this thing. We never saw that level of buy side hit. So that was at 20K, 2017, until we got to 2022 at the bottom of the bear market when FTX blew up. We're also like 15K, so we're below that 20K level. Suddenly shrimp start buying like crazy. Now, that period was my like formative years in Bitcoin. I bought the 2017 top, kind of learnt about markets, didn't understand Bitcoin really in 2018. Late 2018, my shitcoin portfolio has gone from $10,000 to 10 cents. And I've gone, all right, fuck, I did something wrong. I got to go back to basics. And then I read the Bitcoin white paper and I was like, okay, right. This is, now I get it. Bitcoin's actually the important part. And I've made all those mistakes, but I learned about markets. And in that time, from 2018 till 2022, the podcast circuit for Bitcoin really exploded. Lots of people talking about it, lots of thought leaders, lots of essays, lots of thinking about what Bitcoin could be. Mining started to get integrated in the energy grids. We started seeing it like used in humanitarian environments. Like it started to form and be like, holy shit, this thing's really coming together. So the education dynamic of Bitcoin, that is really the all-time high of when people were the most interested in learning about Bitcoin in that 2020-21 period. So when you actually go like, retail is dumb money in every market, and yet here we are 5 years later, and these guys are buying the bottom, not the top. That is an interesting story. That is actually showing you that the shrimp leveled up. They worked out that I actually need to buy as much as I can right here, even though it's scary, even though it's dead, even though everyone's telling me Bitcoin's over for a decade. I'm going to step in front of this thing. Like literally polar opposite behavior. So we don't have as many tourists this cycle, certainly not in Bitcoin itself. We've got a lot more sophisticated institutions, that's for sure, but also retail is actually not dumb. People who are in Bitcoin and are Bitcoiners, all the dumb money is kind of in the shitcoin world, trading all the meme stocks and meme coins. And they got rinsed time and time again. People who are in Bitcoin, like they've got the patience, the resolve, the resilience. They're kind of happy to just stack sats, right? Stay humble, stack sats. And these are actually smart people. So we've got tourists enough to read their signals, but more importantly, there's a big pool of people who really know what they own and why they own it. And that's pretty cool.
Need a way to sign, verify and secure your Bitcoin? Australia's one-stop shop for Bitcoiners has you covered. From signing devices, nodes and backup solutions to bitaxes, decor and apparel. Visit shopbitcoin.com.au.
Yeah, I know quite a few people now that are transitioning and wanting to sell their shitcoin portfolios and move it into Bitcoin. But again, there's still that sort of behavior where they're trying to time the market. They think, oh, maybe if I hold towards the
Totally.
end of the year, it will go up, and it's gone down. So yeah, it's
Totally.
interesting. Like I think people are getting smarter, but that's just my impression, at least of like the people who I've seen starting to invest in Bitcoin, and they're not trying to trade, they're trying to really hold.
Use it
But
as a savings account. That's how I view it.
yeah, I want to go back to something you said because it was really interesting and I want to dig a little bit deeper. So at the start of the conversation, you said that, on chain you can tell ETFs and institutions who are buying. But then you've also mentioned something that you believe there's nation states also buying, but we don't know that yet. And I know people like Prince Philip of Serbia has mentioned that, there's definitely nation states that are buying on the down low. At what point do you think we'll know that?
Oh, anyone's guess, because, and this is another thing, like over the years, Bitcoiners have talked about the game theory. And the game theory is if you're a nation state, you're buying, you actually don't want to tell anyone because you want to fill your position before that happens. And again, that is speculation. So when we talk about the on-chain side of the world, we can see existing holders. But we can't see who they are, right? And I strongly encourage people, don't worry about whales. Don't worry about trying to like track big holders. You're really just looking at aggregate behavior. Primarily, the main actual tool that I use to track holders is how long they've held it for. Because statistically speaking, the longer a coin has been held, the more likely it's going to stay held. So we generally look at like who's held their coins for 2 years, 3 years, 5 years. Show me those guys, because they all generally start spending and selling their coins in the late stage bull. Now, this is what's so interesting about this current market structure, because right now, that is exactly what's happening. The bear case is that we are currently seeing sell side that would have killed, buried, and just incinerated every bull of the past. And yet we're going sideways, not down. And this is why I just have to look at this and go, because every sold Bitcoin is a bought Bitcoin, right? Newton's third law, equal and opposite forces. There is a huge pool of buyers, huge pool of buyers. That is the interesting part. We don't know who they are. We'll find out eventually, but they're bringing tens to hundreds of billions of dollars worth of capital to buy, and the market's just not going down. Even if it goes down, by the way, this concept still makes sense because we haven't gone down given the sell side that's already happened. So it's a fascinating dynamic. Honestly, I spent all day in the data analyzing this, and I don't have a thesis on who the buyers are that I'm satisfied with. But all I know is that they're big, they're patient, and they have to be sophisticated. That's the only way that works.
Yeah. Can you tell geography, like from on-chain data, like where the buyers are located?
Not easily. Not
Yeah.
easily. And the main reason is that in theory, you could, by looking at like time zones, when the coins are moved, you could potentially do like some really deep, dark work trying to track like metadata, but that's like forensics type level. And really very challenging to scale. So, and honestly, I don't think you need to. I think you just look at like the general flow of funds, how long have people held it? If he happens to be German or he happens to be American or he happens to be Australian and they just hold for that long, who cares? They're all Bitcoiners and, they kind of get the same holding pattern.
My very unscientific hypothesis would be like, for example, when you look at the hash rate heat map, it looks like US, China, and Russia are really like the three kind of leading superpowers. And I wonder if, like, I would just assume it's them buying the Bitcoin on the down low. But who knows? Like maybe like the odd
It
small
makes sense. And
country. Yeah.
yeah, there's kind of on the sovereign level, there's two types of sovereigns that this makes the most sense for. The really small ones, right?
Yeah.
Really small ones where like they can get an outsized advantage, and the really, really big ones where they're like, this is national security. They're the two that really matter. I don't think we're going to see anything coming out of Europe because like it's just, they regulate themselves out of existence as a business model. So I don't see them making any of these moves anytime soon. I don't see Australia making any of these moves anytime soon. It's going to be your small countries that have an outsized advantage and the big ones that need to maintain dominance. That's really how I see it.
Yeah. Interesting. Very interesting.
Very.
But I'm a complete noob. Like, I don't look at on-chain data at all. And if I wanted to start doing that, where would I begin?
Well, I mean, we've got every chart under the sun on Check on Chain, but look, the general framework is you have to ask yourself why you would want to look at data. Because for some people, and honestly, even with some of the most advanced models in the world, it is extremely hard to beat daily DCA. Extremely difficult to just like daily DCA. It's just a tried and trusted method. Works all the time. Weekly, monthly, whatever it is, just like regular dollar cost averaging. The smaller your granularity, so if you're doing it daily, and a lot of platforms do service daily, it's just really hard to beat, truthfully. So that's kind of the first point. The reason that, I mean, I love data, right? I kind of study this stuff, but the reason why I use it is to just know what's going on. So I'm a big advocate for the volatility is tough. And imagine right now we went to 80K or we go to 150. In both of those two scenarios, completely different directions, every person looking at the price chart, your uncertainty level is going to go up. If we go to 80K, you're like, holy shit, what happened? If we go to 150K, you go, whoa, what happened? The way I use data is to help people think through those scenarios, why they might happen. Why would we go to 80K? Because I can see all of this selling. I can see all these people starting to, it's just overwhelming. The profit taking is bigger than we've seen in the past. Compare it to past cycles. Oh, look, we've now got 50% of all the buyers are underwater, starting to get worse. You can profile and help people understand if we go from 126 down to 80, why did that happen? So that when we go to 86K, and that doesn't mean that we will, but if we do, every single one of my subscribers is going to say, yeah, it makes sense. I don't like that we're at 85K or 80K, but I can kind of see it coming. And likewise, if we go to 150, and stop and top out there, that is also a very likely zone where we're going to set a huge amount of sell side come in and oversaturate the market. So just helping people think through the scenarios in advance. And at the end of the day, the only constant in markets is people and the 100,000-year-old hardware that sits between our ears, the emotions that we feel during FOMO, fear, greed, all that. It's never going to change. We're going to get to a threshold at some point to the upside where people are just way too profitable and they're going to cash out and they're going to top the market out. And there's also going to be a point in time where we are so down and so fearful that there are no weak hands left. The only people who remain are the hardcore hodlers. So I try to just map out where are those inflection points ahead of time. So when we get there, if we go to 80K, the average guy is going to be panicking. I'm going to be stacking sats like crazy because I've thought through that scenario ahead of time and I know exactly what I'm going to do.
Yeah, so it's kind of like, if I'm hearing it correctly, the benefit of kind of following this is, one is to alleviate any anxiety you might have around not knowing
Correct.
why certain things are happening. And the second would be essentially, if you do expect a potential scenario where there's a drawback, you can actually plan for buying more.
Totally. And not be afraid when it happens, never be a deer in the headlights. But also I think there's just, I mean, I don't know about you, but I literally look at Bitcoin stuff every single day. Could be a podcast, could be the price, could be charts. I'm doing Bitcoin things literally every single day.
Yeah.
It just is kind of interesting to just know what's going on. You know what I mean? Like, it's like watching my Bitcoin news. It just happens to be in the data. And it's like, I'm just exploring what's going on because it's kind of interesting to me. It's really interesting that suddenly we've got options and futures are this big and, the ETFs are the most successful in the world. Like, just understanding all the incentives and bits and pieces just gives me a better understanding of how the world works, how the Bitcoin world works. I think for a lot of people, certainly for me, I mean, Bitcoin is like my life savings. So like, do I want to know what my life savings are doing day to day? Probably. That's just understanding is actually a really big motivator.
Yeah, absolutely. I do also follow Bitcoin things every day, and sometimes I get distracted by community stuff. Like, for example, recently Sydney has been having a 2-week knots versus core war, which is it's just been going on for
There couldn't be a bigger nothing burger or a battle of the nerds anywhere in the world ever. No one cares. And the thing is about that debate, even if it was important, which frankly it isn't, even if it was important, they've lost the audience. Both sides yelling at each other. No one cares anymore. Go and fight in the corner. Please get your room. I don't want to hear it anymore. No one cares. You've bored us all to death. We're not going to make any progress on this. We'll be arguing about this in 2100 when the block reward runs out. Move on.
Is it as bad as the block size was, or is it like less
God, no.
intense?
God, no.
Okay,
Oh, it's
so
not even
nothing
close.
like it.
No,
It's just
it's not
we've
even remotely
seen this
close.
before, and everyone's like, okay, it's a nothing burger. Yep.
It's a total nothing burger. It changes absolutely nothing. And this is the thing, like, you know, my general view, I'm a pragmatist. I just look at things from a very practical perspective. The JPEGs on the chain don't actually change anything. Like, sure, it's not ideal, but also permissionless system, there is no technological way, and they can argue and complain that we should build fences and close windows and use whatever analogy they want. It's like, that's fine. You will never stop it. So therefore, you can spend the next 100 years talking about how you're going to stop it and never actually do anything about it. So as a pragmatist, I'm like, what are you wasting our time for? Because there is no solution. And then they do a hard fork proposal, it's like, or a soft fork proposal. It's like, guys, this is ridiculous. This is insane. Nothing about this is a good idea. Just let it go. Let it go. Because like, there's no ground to be made in any of this. We're just going to be fighting about this forever. You're wasting all of our time.
Yeah, yeah. I mean, I don't understand the technical details enough to have an opinion on it, but it's interesting to listen to both sides nonetheless. But yeah, I wanted to ask you a little bit more about the on-chain analytics. I think if I heard you correctly, is it the best strategy to DCA daily rather than weekly or monthly?
If you do, so basically the finer your resolution, if you do monthly, you might buy on the first of the month, for example, and then we have a big dip. And then by the end of the month, we might be at the same price. But you kind of just, the odds that you're going to mistime that volatility is higher. If you do weekly, you'll probably get a nice even price. If you do daily, you literally get the most even price you can. In theory, the 1 second DCA is the right way to do it, but it's ridiculous because it doesn't make sense, too small. So don't overthink it, but like, it's the same as if you do like yearly. If you do a yearly DCA, you're probably going to miss a lot of the opportunities. Monthly, weekly, daily's kind of the best because it is truly the most average price you can possibly get. But I did run the statistics to try and understand like what is the best time of the best day. I'll try and get I'm pretty sure it's on Australian Eastern time. Yeah. No, I've done the
11:30 on a Friday night.
11:30 on a Friday night is the worst time. So therefore you actually want to buy just after midnight. So you want to buy just after midnight on the Saturday morning, because then you're going to get after the worst time, statistically speaking.
Yeah, nice. I heard you say that and you just like stuck with me.
And then daylight savings comes along and I don't know what time it is now.
Yeah, I don't know either.
Plus or minus an hour.
Yep. So I think as a noob, step number 1, I'll subscribe to your newsletter. I haven't done that yet. Because I just sometimes get intimidated by certain things. I was like, because there's so many different rabbit holes to go down and you just don't know which thread to follow next. But I think, I read part of the report that you've recently done with Unchained, the 62-page report. I read the executive summary and understood that really well. And then I started reading down and I got to a section, I was like, whoa, I have no idea what he's talking about. So JP was like, you need to read it a few times. It's really like intricate and you need to like go back and forth to understand things at a deeper level. So I'm going to do that because I promised I would. But what would be a natural progression in the journey of someone who wants to learn more about like the on-chain world? You might like start, there's passive and subscribe and just read and absorb, but how would you level up?
For sure. Yeah. I think, look, at the end of the day, it is full of jargon and it is a strange data set that we don't have for anything else. Like, I actually feel blind when I look at the gold market or the equity market because I don't have my tools. I can't see transparently what's going on. So the way that I think about on-chain data, it's like sitting in a game of Texas Hold'em poker. Imagine you could see, like, everyone's cards were holographic, so you can see what everyone else is holding, right? They might be a little bit blurry, but you can kind of see the outline. He's holding looks like a heart, that looks like a queen. You can't see the deck, so you can't see what comes up next. And that's what you can't predict the future. But what you can see is, I know that guy's bluffing. And it could just be you're not even a player, you're just an observer. You can see everyone's cards. I know that guy's bluffing. I know that guy's played and won the last 4 hands, and he looks like he's going to play this one. Just having that insight of like X-ray vision of what everyone else is doing. So are they taking profit? Are people in a lot of profit? Are they locking them in at losses? Like, looking for those incentives is really what it's human psychology. What are people doing and what's their incentives and drivers? And really the first step, there's one metric that is the backbone of all of it. It's the most important metric, in my opinion, it's the most important metric in Bitcoin. And it actually recently hit an important milestone. So I'll talk about this because this has been the hook for me. It was the hook for most of the analysts that I've worked with. They're like, the realized cap was that unlock. So the realized cap, it's different to the market cap. The market cap, we take the entire Bitcoin supply and we compare it to the current price and we say that is the market cap. But the reality is that not every coin transacts every day. A lot of coins are lost. Some are hodled, some are old, some are new, some are in exchanges. It doesn't really tell us an import, like the market cap, okay, it's 2 trillion, but like, is it? The realized cap is a metric that every single coin in the supply, we price when it last moved. So Satoshi's coins are worth 0. He's got 1.1 million of them, but they have a price of 0 because there was no price when he mined them. A miner may have mined it back when it was $15, but lost his keys. Those are priced at $15. The UTXOs that I bought back in 2019 are still saved at that, whatever it was, $10,000 or $12,000, $8,000. They're saved there. The thing that's really interesting about this, back in 2019, let's say I bought 1 Bitcoin. If I bought 1 Bitcoin for $10,000, I invested $10,000. That's my like input money. And that's, for me, that's my proof of work as a human. I literally worked in a job, earned 10 grand, and I bought 1 Bitcoin with it. If I then sell that Bitcoin today at 100 grand, I've locked in a $90,000 profit. But the buyer had to bring in $90,000. So by valuing every coin at the time when it last moved, we achieved 2 things. One, it actually captures how much wealth Bitcoiners have saved in Bitcoin. And this metric this year, like 2 months ago, and that'll be in that report you were referring to, crossed $1 trillion. So whenever you have somebody tell you, oh, Bitcoin's worthless, there's no intrinsic value, no one trusts it, you can say, well, I can see right here, measurably, that Bitcoiners have trusted this thing with $1 trillion of our savings. $1 trillion of our hard-earned money we have invested in this thing, and we still hold it today. So that's the first one. But then we can see how much profit are people in. Because if those coins I bought in 2019, the cost basis is 10K. So I now know that I'm up $90,000 in profit. That's my incentive. If that goes up more and more and more, my incentive becomes, I can probably buy the house now, right? Now I can actually cash out and do something with my life. And if we look at that across the whole market, we can see where people's cost bases are, where the price would have to go to make people feel really good, where do we have to go for people to feel really bad, how much money have people saved in this thing, how much profit are they taking, how much losses are they taking off. So it's this really amazing idea where you can just see where everyone's incentives are. And that metric alone, like the raw savings power, there's about $1 trillion that Bitcoiners have invested. And if the market cap's 2.3 trillion, that means that Bitcoiners are sitting on $1.3 trillion worth of unrealized profit. And I love this because Berkshire Hathaway, right? Warren Buffett has said that Bitcoin is rat poison squared. I'm like, well, sir, your market cap is $1 trillion. Bitcoin has invested $1 trillion and we're up 1.3. So how does that feel, right? We've got more profit in our system than you do in the entire market cap of your company.
That is so interesting. That is just wow. I love how you
and that's one
explained
metric.
this. Yep. That's
just one metric, and it's just all we're doing is showing how much Bitcoiners have saved and where they saved it, and then everything else is a knock-on effect from there.
Yeah, yeah, that is wild. Like this is just really you've hooked me, and now I'm like interested in going down this rabbit hole. But I want to ask you something.
It's cool,
that
isn't it?
I got asked by someone in the community, and I didn't really have a solid answer for them. But in the case where Satoshi's coins move, what would that do to the price?
They will move. So there's another controversial opinion. They will move eventually, because at some point in time, when we run the human experiment for long enough, one of 3 things will happen. Satoshi will come back and move them, or his inheritance or whatever. I think that's an unlikely scenario. at some point in time, cryptography is going to break on those earlier coins. Could be quantum, could be some other computing form. But if you run the human experiment long enough, we will eventually break that cryptography because technology keeps going. So those coins, if they're lost, they will come back to market via that mechanism. The other way they can move is that the community can freeze them. And I don't think that's going to happen. I know some people want to do that. There's, proposals and thoughts about freezing the coins. I don't think that's ever going to pass. As a pragmatist, I think it's ever going to happen because it just degrades Bitcoin's property rights concept. And that's a whole topic to itself, the quantum thing. Now, there's no question that the market will panic at that point in time. But then at the same time, this is an inevitability. The market's going to price it in ahead of time. And I can't help but think, I don't know about you. If Satoshi's coins came back to market, let's say, for example, who's actually going to develop a quantum machine? Let's just call it quantum. It could be any cryptography breaking system. We don't know what the future is going to look like, but something like that. Who's going to develop that? It's not going to be you or me, right? It's going to be the Chinese government, the American government, or a high-flying tech company. What's IBM going to do? IBM breaks quantum, and the first thing they do is steal Satoshi's coins and mass market dump them. They'd be sued out of business. The probability that it's going to get collected by some benevolent dictator type, I don't know about you, but I would if they auction those coins off, I'm going to buy some of those. I want some of Satoshi's coins. That'd be hectic. That's awesome. That's a great little souvenir. I would totally buy those at whatever the going market price was. So I think, the market will spasm out a little bit at the time, but I also just think that it's kind of overblown. And, if those coins come back to market, it's kind of the law of the jungle. It's just how these things play out. So, I kind of like the chaos. Let's just see what happens.
I just love that. Such a psychopathic answer.
Totally.
I love
Markets are
it.
fun, people get caught up in they want number to go up all the time, but markets go up and down. They never go up in a straight line, but we're at 100 grand. People are calling Bitcoin dead. It's it crashed to $100,000. This was a meme years ago. We're oh yeah, at some point Bitcoin's going to crash to 100 grand. Well, we're right there right now. We're crashing to $100,000. And I know. And there's dudes on Twitter are oh, it's the worst store of value ever. It's terrible. I'm yeah, it's it's only $100,000. It was $10,000 5 years ago. What a terrible store of value. We saw gold recently went to 4,400. And the amount of Bitcoiners who are oh man, I think Bitcoin's failed. It's dude, gold's been outperforming Bitcoin since August through to October. That window is the only time where that's happened. And by the way, gold's been going nowhere since I was a boy. So give the gold bugs their 3 months of joy. They've been waiting decades for this.
Yeah, for sure. Oh, yes. That concept around the lost coins being added back to the circulation is an interesting one because that's something I hadn't considered. Obviously, it doesn't make sense. It's completely nonsensical for us to ever increase the 21 million cap because there would just be no consensus around that. I can't see that
Agreed.
reality. But it's also interesting to think, in that same case of coins being added back to the circulation, that would obviously devalue the existing supply. So what's my question here? Do you see that proposal to potentially freeze those coins being made and being, I don't know. Do you know what I mean?
It'll be made, but I don't think it will happen. Yeah. Someone will propose it for sure. That's definitely going to happen, but I don't think it will pass. And the main reason when I rationalize this, if you freeze Satoshi's coin, so again, people talk about a Q day, the day when quantum finally starts breaking cryptography, and it will be a binary event. It'll happen, and then suddenly it can start cracking cryptography. If we don't know when that's going to be. So if we freeze somebody's coins and say that you didn't upgrade in time, we're going to freeze it as of this date, we made the decision for somebody else that you can't spend your money. If, on the other hand, we allow the market to do its thing, and eventually quantum comes by and it does steal those coins, that person made the decision to not upgrade. Could be because they're dead, could be because they're lost, whatever it is, but they made that decision. We don't know. And here's a good example of this. This year, in July, we saw those 80,000 Bitcoin. They were bought in 2011. by all measures, people would have assumed those to be lost coins. And yet this dude shows up and just one day decides, yeah, I'm going to cash out 9.5 billion. Just like comes out of the blue. There are guys out there who have coins, that many coins for that long, and they've held it for 14 years. And not only has he held it for 14 years, he didn't even spend it. It's been sitting in the original wallet that he had for 14 years, and he finally moves them. Fascinating dynamic, but like you can't, I just don't think we're ever going to reach consensus to steal people's coins. And the tension is going to be, if quantum can break the cryptography and take people's coins, is that a breaking of Bitcoin's security assumptions? Or is the community deciding we're going to take your coins off you? Is that a breaking of the concept? In my opinion, the second one is worse, because Bitcoin as an idea, if we can socially agree that we can steal these people's coins and freeze them, to me, that's human governance decision stepping in because we're afraid of the price. I don't think the price should be a factor in the consensus rules, honestly. I think, generally speaking, we should, like, when a quantum computer can crack that cryptography, what they're actually doing is they're getting the private key. And the rule of Bitcoin is if you have the private key, you have the coins, right? Not your keys, not your coins. If you lose the private key because you didn't upgrade because someone could attack your coins, you made that decision. It's the same as leaving your seed phrase on your desk in the office. If someone takes your coins, sure, legally they're stolen, but you no longer have them. And possession is 9/10 of the law. So I'm of the view that we will never come to consensus to freeze, and therefore rule of the jungle will most likely apply. We'll create the quantum secure system. People can upgrade if they want. If they choose not to, they're also choosing to have their seed phrase on their desk.
Yeah, yeah. That's interesting. Makes sense. Okay, I'm glad I asked that question because it just really needed to be cleared up.
It's a very complex puzzle. And like quantum is that whole field is also full of fugazi. Like the only industry that's got more scammery in there than the crypto industry is the quantum world. So it's very hard to decipher fact from fiction in both of those industries.
Yeah, it is. We'll see what happens. It's such an interesting time to be alive. But I also wanted to ask you another future-focused question, and that is more on like the adoption. There's obviously the two dominant theories is one that will have an S-curve adoption, and another one is that it's going to be more, gentle. More, it won't be going exponentially. It's just going to be very slow and steady. What do you have an opinion on that? And does any on-chain data support your thesis?
Yeah, good question. So I have a feeling that we're going to get a bit of both, because I'm of the view that most individuals like you and me who kind of really get Bitcoin and actually want to go and buy it, custody it, I think that we're getting towards the end of people who are going to do that. If we go through Bitcoin's timeline, it started with the cypherpunks, moved to like the libertarians, then it started to move to more of the investor types, and then the gamblers and the speculators. And then you got this like pool of Bitcoiners who really like ideologically believe in it, run nodes, even know that people are arguing over op returns, all this stuff. Like that's a very small subset of the world. The vast, 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 vast majority of people, they just want a pool of assets and they want to go to the beach. They don't want to think about any of this stuff. So the S-curve side, I don't know if it's going to be like just a massive retail, like individuals coming in and buying this thing. I think a lot of people will get allocated it in their retirement accounts because it will just become, it's normal to have a 5% or a 2% or a 1% allocation to Bitcoin. Like that's just a normal thing that everyone just has, and their financial advisor just does it for them. That's going to be a big part of it. But I think the S-curve that is really interesting, we can talk about on a per capita perspective. I think we've gone through a large part of that where individuals adopted it. But there's another S-curve, which is all about the capital. We're in a world where inflation is going to get worse. We're seeing the reason gold is going up is because the monetary system is changing. The bonds are no longer safe. Like that's a whole thing to itself. Really, there's only two assets in the world that are neutral, scarce, and have the properties required to replace the bond as the base level of savings. Gold and Bitcoin. And gold's the only one that's big enough. So that's why gold is doing what it's doing. So the fact that Bitcoin after 17 years is being talked about at the highest levels of sovereigns, companies, the whole lot, as being a potential contender as a savings asset in the future, that alone is a wild concept after 17 years. So whilst we may not get the S-curve of individuals, the S-curve of dollars, money coming in, that is very, very much on the table. Because as Bitcoin gets bigger, like the reason that gold is able to go from, gold has added $12 trillion to its market cap this year, just this year. And we're in October or November. It's added 12 trillion. Bitcoin's 2 trillion. That's 6 Bitcoins. That's 6 entire Bitcoin networks. When like a very, very, very small part of the world goes, you know what, we need to allocate 2%, 5%, whatever. It's just the amount of money is just tremendously big. I think the S-curve, and that's going to show up in the price naturally. So it's going to go through waves of this thing. I don't know how it plays out, but I can see this wall of money. That's how you can have hundreds of billions of dollars of sell side and the price goes sideways, not down.
Yeah. Bitcoin's a funny thing because, sometimes it really feels like it's growing really slowly. And other times it just, when you take a step back and you realize it's actually like the adoption's growing ridiculously fast. And the best analogy I can give, it's almost like your kid, you see them every day. You don't necessarily see the height difference day to day, but then, you might measure them once a year against the wall. You realize they've grown like 10 centimeters. That's kind of what Bitcoin feels like, don't you think?
Totally. And it goes through growth spurts. Like there's periods of time where, again, if you wind back the clock 12 months, we were trading at 60K and here we are at 100. Like the moves just suddenly it just comes out of nowhere. And I also ran the statistics on this. On a daily basis, 40% of the time, Bitcoin goes less than 1% in either direction. 40% of the time it goes nowhere. 30% of the time it goes up, 30% of the time it goes down, more than 1% or less than 1%. If you wind that back to a quarterly basis, so that's like a beautiful bell curve on the daily side where it kind of goes nowhere most of the time. On the quarterly basis, it has a massive skew positively where, again, a lot of the time it goes nowhere, but then some quarters it goes up 100%. And I ran this study saying in each of the previous cycles, 2017, 2021, and this current one, I think I ran this study in mid-24. Basically, I showed that if you miss the 10 best days, just set all the 10 best days of that cycle to 0, you actually are flat to down on the entire cycle. This is a 4-year period. Those 10 days are so powerful to the upside that is where the entire return profile comes from. So when you get all these day traders who are trying to like get in, get out, trade around this thing, what they're trying to do is avoid the 10 worst days. And there's no question, if you miss the 10 worst days, your returns go from a 10x to a 20x. That's great. But if you miss the 10 best days, you get a 0. So like you lose your 10x that you would have had if you just sat there and did nothing. So for the average hodler, stay humble and stack sats is just the tried and trusted method because you're going to get those 10 days. And like, who knows when those 10 days are going to be? They're all over the place, but sometimes they happen and they're just big green candles. And if you miss it, you're kind of out of luck.
Yeah. Yeah. I mean, this is my first and only bull run, so I'm like completely selfishly just wanting to have the experience of like some of the prior bull runs. Even if there's a massive drawback, I just want to experience it.
Totally.
As silly as that sounds.
Totally. Yeah. No, it's a real thing. And like this bull is very different. In 2021, it was like 3 or 4 months of just straight up. And then it was just down only. So that was like a whole thing. But this is like up, sideways for a year. Up, sideways for a year. Up, sideways for a year. So it's a very different animal. Much more structured, much more stable. And the bear market, in my opinion, is going to be far, far less severe without some kind of major run up. So, even the downside is not that bad. And I use this good example. My old man's been in Bitcoin since 2020. I finally got him in. He rode the bull, had a great time, told me all about the bear market every day about how shitty it was. And now, in this current market structure, Bitcoiners like me who've been around for a long time are like, where's my volatility? It's so boring. Oh, Bitcoin sucks. And my old man's like, hey, should I buy more? Like, I really like that it's not going down anymore. So like you can see the two different high octane Bitcoiners are disappointed. And my old man's like, hey, I should probably buy some more of this thing. Like it's really doing very well. So like two very different perceptions.
I mean, I like it all. So yeah, it's just interesting. Like you want to experience this. Yeah, there was definitely like a drawback earlier on in the year that went back like 30%, and that was my first
Yeah,
drawback in Bitcoin. And I remember going to one of my friends, I'm like, it's going to keep going down. They're like, oh, princess, welcome to Bitcoin. And this time around,
totally,
I'm like, whatever.
totally.
Yeah.
And as an example, like that period in it was like March and April, we went down 32%. That period, so on the way up this time last year, so the elections happened in the US, and we went from about 75K, we zipped straight up to 85. Like it was instant. Very, very few coins traded hands in that like 75 to 85K zone. And in about January, it was about like 105K or something, I started writing a lot. I called it the air pocket. And I was like, look, I know no one wants to hear this, and I can't predict this is going to happen, but just be aware that down there between 75 and 85, no one knows how much demand is there. And we're seeing a lot of buying up here at 95, 100, 110. And I was just, again, trying to prepare my subscribers and say, look, just be prepared that we might go down and just test that zone and just find out who wants to buy down there. And lo and behold, we went exactly down to 75K. That was the level. We zipped straight through it, chopped around at 85 for a month or so, and then up we go again. So that was the way that I was thinking about, like, just be prepared in case we go there. I don't know if we will win it up, but be prepared. That air pocket, it's just asking to be filled.
Yeah. Love it. Anyway, thanks so much for your time. Do you have any last thoughts that you want to share with the audience?
Honestly, the best advice in all of Bitcoin ever is stay humble and stack sats. Just like, don't get distracted. Just keep stacking away. This asset is so well positioned for the future that's coming. Just buy and hold. It is the best savings account that you're going to find. Like, you do not have to worry about it. Sure, prices are going to go up and down, but this thing is rock solid. Like, this is the most powerful computing system that's ever been invented. It's just a force of nature, and the cat is out of the bag. And there are no shit coins that are going to beat Bitcoin. Bitcoin is just the thing. It's Bitcoin and gold. And like, for me, I'm 90% Bitcoin, 10% gold, and I don't think about my holdings at all. I don't even think that they're investments or assets. They're just my savings account. Fiat's going to continue to get worse. Inflation is going to get worse. You just got to sit tight, and there's $1 trillion worth of other people who agree. So just stay humble, stack sats.
Love it. Thanks so much for your time, James.
Good on you. Thanks for having me on.
Thanks.
That's it for this week on The Honest Money Show. A big shout out again to shopbitcoin.com.au for making this episode possible. Until next week, stay smart with your money and stay decentralized.